up, cause we about to kill this.
Money on my mind like a migraine's mantra. Multiply my mantra, make a mantra out of numbers, 100 syllables a second. When I'm talking about abundance, every rhyme, compound interest. I'm the thunder of the thunder. Watch me liquidate doubt like a flash crash slumber. Turn a decimal dream to a Wall Street wonder. Run the profit, pocket logic, sonic, all chronic economics, psychotic, tonic. Crypto in the cortex, forex in the frontal. Mental mobile like a mobile in a funnel. Run it back, I'm the algorithm's godson. Every beat another income function. Metaphor merchant, syllable surgeon. Cut the verse open, watch the profit emerging. Stacking in my sleep, my dreams got returns. Even my nightmares learn how to earn. Ticker twitching, I'm a vixen for the volatility. Profitability, visibly vivid within agility. Civility, minimal villainy, inability, killing liquidity, call it syllable artillery. Synapse sniper, I snipe syntax with synergy. Trigger words, twist through the circuits of my energy. Brainwave bank vault, tongue tip treasury. Spin math metaphors, dead to divinity. Algorithm in my arteries, automate arteries. Hobby metronome matching the market's arteries. Binary breathing, I'm breathing in bit rates. Mind state, minute drum that dictates. Break beats in the ledger, letterhead leverage. Every phone we coded phonetic inheritance. Wordplay weaponized, weapon check verified. Every line liquefied, solidify, terrified. Make that money, yeah. Make that money, move. Make that money, talk. Make that money, prove. Make that money, yeah. Make that money, move. Make that money, talk. Make that money, yo. I'm the broker with the broken, turning focus to a token flow so potent. Open market slogan, gold in motion. I deposit every moment in a vocal vault while your portfolio crash. My default to exalt them. Pound cadence like compound interest. Every syllable invested, principle relentless. Equity and eloquence. My ETF is elegance. Every round my dividend, precision ever sent. Microchip money, neural net hustle. AI muscle, make fiat. Work on mine like a ledger. Line by measure, time I treasure. Grind for pleasure. Metaphor mending, simile spinning. Every breath banking, never pretending. Volcano veins, that's molding gain. I'm coining phrases that point my name. Yeah, I talk fast, like cognitive cash. Verbal velocity, turning thought to a stat. Flash in the plan, not flash in the pan. Fiscal alchemist, gold in my hand. Regal trade bars, each syllable stock split. Every tick-tock, that's clockwork profit. Cognitive commodities, I corner the mindset. Brain full of data like a Bloomberg headset. Flash crash cadence, volatile tone. My thoughts hedge funds when I'm left alone. Precision, incision with vision. Cut ball sharp like fiscal decisions. Molecular market, my metrics mechanical. Perfect paradigm, parabolic botanical. Philosophical dividends, syllable citizens. Infinite looping like time, never discipline. Make that money, yeah. Make that money, move. Make that money, talk. Make that money, talk. Make that money, yeah. Make that money, move. Make that money, talk. Make that money, prove. They want fame, I want float. They want clout, I quote growth. Why they toast, off coast goes. Profits, phantom stocks in a trench coat. I got liquidity locked, y'all. Can't stop spitting that guap raw. Every tick that clock jaw drops. Profit pop, non-stop. Shot. Make that money, yeah. Make that money, move. Make that money, talk. Make that money, move. Make that money, talk.
Oh, brother, oh, brother, oh, brother. Welcome back to another episode of the Matt Kohrs Show, where it's a beautiful Tuesday, October the 21st, and we're kind of close to all-time highs in the world's largest casino. And to celebrate, to help the markets along, I have decided to wear my luckiest of all shirts because, hey, we all have to do our own parts. Folks, yes, market's looking good. Pre-market, we're basically just above the closing value from yesterday in the SPY and the Qs. We have some news related to GM and Coca-Cola they just reported, but the news that's really catching, I guess, like the attention, if you will, of retail traders and probably institutions is soft metals. Silver and gold are absolutely plummeting this morning. The last time I checked it, I don't know if you're long on gold, it's down 3.2% this morning, and then silver is currently down 4.55. So metals are taking a hit. Equities are holding pretty steady. There's a couple ways to interpret it, and of course I'll be breaking that all down, but we do have other things to chit chat about. I'm going to remind you guys about this a little bit later, but I do want you to know that the remainder of this week is going to be a really, really weird one. I'm going to be doing my best to get out all of the normal content I possibly can, but the chance of that happening is slim to none. Now, a lot of you are probably thinking to yourself, why? Matt, pray tell, what in the world is going on? Well, your boy pretty much this afternoon, a little bit after the show ends, I need to get on a big metal bird that brings me across the pond referred to as the Atlantic. I need to get my butt to Switzerland for a crypto conference. So that means that with the time zones, this and that, things are a little bit up in the air. So we will be putting out content. I'm just not quite sure about the schedule because of the 6-hour time difference and what that means and what that doesn't mean. And of course, to make it all fun, as I'm supposed to be battling this jet lag because it's an overnight trip, because that's how you get to Europe, is you leave late here and show up super early there. Of course, I woke up and I've been battling the sniffles. So I just want to put that out there. I'm throwing that out there that we're going to be streaming. Make sure you are subscribed on Rumble. Make sure you are subscribed on YouTube. But we have some crypto, Switzerland, European trading degeneracy content coming your way. So I just wanted to let you guys know all about a little bit of a shift in the schedule. So I've never been to Switzerland. I've heard it's beautiful. I'm very excited to go. If you happen to be in Switzerland, hey, maybe I'll meet you. And if you're not in Switzerland, well, probably will not be meeting you then. But I'm very excited. Obviously, I've never been there, but I think we all well know that it's an absolutely beautiful country and a beautiful time of the year. I'm very, very excited for the crypto event that I've been invited to host and talk and interview and chat at. So it's all going to be a very, very fun time. So I just wanted to call that out there. Things are going to be a little different, but don't you worry. I am around, and that's kind of what's going on. And we will be doing our best to put out as much real-time content as we possibly can while we're there. So just a little bit of housekeeping on all of that. All right. I hope you guys are having a good one. Yesterday, you guys know I did not have a good one. Not only did many of us in aggregate have a lot of issues because AWS was down, prompting quite a few issues on retail-based brokerages. Even though it wasn't really the brokerage issue, it was where the applications were hosted, which was an Amazon issue. Allegedly, as of this morning, that is resolved. But more important than all of that is I basically live streamed my absolute idiocracy to all of you yesterday. As I pointed out to you, price structure, momentum, and options flow was all bullish, all of them. We were getting higher highs and higher lows. Price was above all the major EMAs. And on top of that, if you looked at the S&P 500 and the Mag 7 option flow, people were buying calls and selling puts. The delta was ripping through the roof. When those three things align, it is very, very silly to be betting against it. And for whatever reason, I was betting against it. I was effectively trying to bet on green on the roulette wheel and playing for a miraculous sell-off for the downside gap fill. And yeah, sometimes it happens, but that doesn't necessarily mean it was a good trade. Obviously, I was fighting the trend and you guys saw it. And obviously, it cost me quite a few dinero. But hopefully, I'll get my head out of my ass today and actually do exactly what I know I should be doing as I commentated on it in real time to you guys yesterday, where, hey, I am a trend following trader. I want to trade with big money. I don't want to be picking the tops or the bottoms. That is not my goal. I don't want to be doing that type of reversion. It's just not what I enjoy doing. It's not how I see the market. Now, just because I don't like it doesn't mean you can't make money off of it. And it doesn't mean it shouldn't be the way you are trading. There's a lot of contrarian traders out there who make a lot of money. It is just not for me. And obviously, when it comes to you and your approach for the market, you should be doing exactly what makes the most sense to you. Obviously, there's going to be some core pillars that are going to be the same in all of these, like risk management, something like that. But for me, I am much more of a trend following trader than I am trying to be a mean reverting trader picking the tops. And did I have good statistical reason to be trying to fade it for the downside gap fill? Yes, gaps are commonly filled the very first day, but that doesn't mean always. And unfortunately, yesterday was one of those days where it wasn't the always, it was like the odd man out. And those things happen and you have to be prepared for it. So it's going to be what it's going to be. Hopefully it's a new day. It's a new me. It's a beautiful Tuesday. And hopefully this is a new high Tuesday. And hopefully, most importantly, I hope I can get on the right side of the trade. So I hope you did far better than I did yesterday. I hope you're ready for today. We're going to be talking about the overall situation as it relates to global politics, the U.S. government being shut down. We have some earnings, and we're going to talk a little bit about the options setup for today. So I hope that's all good for you. I hope you're having a good one. I hope you have on your lucky Buffalo shirt. And with all that being said, let's get rocking. Warner Bros. Discovery says it's open to a sale. Shares jump. Oh, all right. A little bit of breaking news there. Stock futures slipped after major U.S. index rally to start the week. So the slip they're talking about, that's a little dramatic. This makes more sense. Stock futures are flat as GM and other big companies post strong earnings. So here we are in pre-market trading right now. We were a little bit below the closing value. We were a little bit above the closing value. We're now pretty much at the closing value in both the SPY and the Qs. But as I alluded to, the major news is the fact that silver and gold, these soft metals, are getting their faces kicked in right now. And I will be explaining what that potentially does or doesn't mean in 1 second. Mason Flint sending in $1.99 with no message. I like the mystery. I appreciate that, Mason. That's very kind of you. But remember, everyone likes a guy of mystery. You're pretty much Batman right now. So I'm definitely tipping my hat to you. That's very kind. Thank you. All right. So one of the big pieces of information and news and updates and I guess thorns in the side of our life yesterday was the fact that the internet was broken. The day Amazon broke the internet for millions of Americans, the prolonged outage offered a reminder of the fragility of global internet connectivity and Amazon's role underpinning much of the online infrastructure. So what happened yesterday? Amazon owns AWS, Amazon Web Services, also referred to as AWS. That is a quote unquote cloud, which remember, a cloud is a fancy way to say someone else's computer. And many companies in the world, but specifically in the US, host their web services, their website, whatever it is related to the internet, they host it on AWS as on their cloud, their computers. That all went down, which means many things went down. So if you're a trader, probably your brokerage was impacting, but even on a larger scale, we had issues with airlines, we had issues with healthcare systems. There were basically anything that related to AWS had an issue. Then you had other things that specifically don't use AWS. Shout out to Rumble Cloud. Yesterday, we had to stream on Rumble Studio. It completely saved our butt because they are their own cloud and obviously did not have the same issue that AWS did. But anyway, this happened very early yesterday. Then we were told, nope, it's all resolved. There's no problem whatsoever. And then guess what? 2 and 3 times later, there were spikes and outages and clearly they were having problems. But fast forward to today, apparently we are all good. I don't know. AWS services recover after day-long outage hits major sites. AWS, which suffered a major outage, is the leading provider of cloud infrastructure technology, accounting for about a third of the market. So basically, 1 in 3 things on the internet yesterday was not doing what it needed to do. By Monday evening, the company said all AWS services returned to normal operations. But to be fair, they also said that yesterday morning, and then we had a day where it clearly was not. Down Detector previously showed user reports of problems at sites including Amazon, Snapchat, Disney+, Reddit, and Canva, just to name a few, and the list goes on and on and on. So as of now, fingers crossed, like I said, get on that lucky Buffalo shirt. We are allegedly good, but let's just wait. You know, you don't want to be counting all your chickens before they have been hatched. All right, bringing it to kind of the bigger global news that's kind of impacting the market right now. Trump makes rare earths deal with Australia to fight China. So right now, on the trade deal, I mean, there's so many things going on, but on the trade deal side of things with US and China, remember, all of it as of this moment is seeming to center around rare earths and kind of confusion of who's allowed to get the exports versus who isn't. And that was, what was it? A Friday ago, where actually 2 Fridays ago, where Trump was really upset about it, said, hey, we're going to hit you with 100% tariff. Market completely dropped because we tilted it in a negative gamma and it just kept going. People bought the dip. We started to recover. And then obviously we're seeing that continuation to the upside right now. Well, with it, I would say from a strategy standpoint, it's not the craziest thing that Trump is saying, okay, just in case this relationship does go sour and we can't get our rare earths, which we get a lot of them from China, maybe we can source these materials elsewhere. And this was some of the hot news as of yesterday that we're now buddies with Australia.
We are discussing critical minerals and rare earths, and we're going to be signing an agreement that's been negotiated over a period of 4 or 5 months. And it was sort of good timing that we got it done just in time for the visit. And we worked together very much on rare earths, critical minerals, and lots of other things. And we've had a very good relationship. We've been working on that for quite a while. In about a year from now, we'll have so much critical mineral and rare earths that you won't know what to do with them. They'll be worth about $2. But in the meantime, we're working with Australia and other countries. They're working with us too. But other countries also on that. But we're really working on anything having to do with military protection, military ships, vehicles, guns, ammunition, everything, the whole thing.
Today's agreement on critical minerals and rare earths is just taking it to the next level, seizing those opportunities which are before us to take our relationship to that next level. And it's been fantastic, the contact that we've had together, the friendship that we've developed. And Australians love America, and I think Americans kind of like Australia too.
It's true, we do.
And as we go forward, I think that today will be...
All right, you get the point. Donald and Anthony, you heard it here first, are taking their relationship to the next level, promoting more, I guess, security for the U.S. and more money for Australia. So Anthony, Donald, taking the relationship to the next level, which is removing a little bit of uncertainty from the overall system. China's rare earth magnet exports to U.S. fall for the second month, reversing a brief recovery. China's rare earth magnet shipments to the U.S. dropped nearly 30% year over year in September, marking a second consecutive monthly decline. The data marks the second monthly drop in the exports after a brief recovery that had started in June. So the magnet stuff is one aspect of this overall very confusing pie, but I just want to bring it up because clearly it is in the news right now. This is the whole thing. And at the exact moment, it seems to be the crux of the issue between US and China, even though that's like, it's one little thing in the larger issue. I do want to remind you that soon, as in next week, Treasury Secretary Besant will be speaking with the Chinese Vice Premier next week in Malaysia to lay the groundwork for the upcoming discussion between President Xi and President Trump that's going to be taking part in the first part of November. So we do have a meeting between US and China next week and also the week after as we're going up the level of importance and decision making. And I also want to remind you that in early 2026, President Trump has accepted an offer from President Xi to visit China. So overall, it seems like we are progressing in the right direction. But if you look at the history of the relationship, I'm really more specifically referring to this particular year between Xi and Trump, that things are going well, and then all of a sudden, like, one of them does something to piss off the other one, and they make some public statement, and the markets get rocked, and then the dip gets bought, and then things recover. So just be prepared for that. Just because things are seemingly trending right now, that doesn't mean we're going to 100% continue in that way. Obviously, especially when we have two guys that like to let things rip on the internet, you got to be prepared for that. Fed crypto conference starts at 9 a.m. Shout out Mason Flint, a little bit of a Fed crypto conference. Speaking of the Fed, remember, they're going to be making a decision next week. How many days will the federal government be shut down in 2025? So we did get a drop yesterday when Hassett said, the economic advisor, he was an advisor, or is an advisor to the White House. Yesterday morning, he's like, hey guys, actually, we might not be shut down. Well, you could see the odds are climbing right back up. So this is part of the reason why the market actually spiked yesterday, one of many reasons, but it was a clear one. And you could see that the chance of us basically getting to November at one point dropped to 62%. And as of this morning, we're already coming right back up. So that was, I guess, a blip on the radar. Even here, you could see it on call sheet. Before Hassett, who's once again an advisor to the White House, he was on Squawk Box yesterday. Call sheet was betting 45 days of shutdown. Then after his announcement, we dropped to 30, and now we're already all the way back up to 40. So we're basically making a full recovery, and I guess the betting markets are no longer really giving a crap about what Hassett did or didn't have to say. But the real reason I'm bringing this up is because the impact on the Fed. On the 29th, next week, not this week, but next week, we have an FOMC meeting, and that is going to be where most likely we're going to get a 25 bips rate cut. But the issue is going into this, the Fed, as of this exact moment, doesn't have much data because the BLS has been shut down. We don't have jobs data. We don't have inflation data. That's going to change a little bit this week, where the BLS, which is shut down, the Bureau of Labor Statistics, has announced that this Friday, October the 24th, we are getting the CPI report. Once again, we are getting the CPI report, the Consumer Price Index. Now, because of this, and also, I guess, what's going on with Australia and China, there's a couple things to consider with the sell-off that we are currently seeing in gold and silver. The fact that gold is taking this big of a hit, it could be, and I'm not saying definitively, but it could be a sign that they're expecting inflation to come in lower than expected. Obviously, higher than expected, you'd expect people to keep going into gold. That's one explanation. The other explanation is we just signed a deal with Australia, even though that's not going to be exactly it. Maybe people are just trading off of headlines. Or maybe it's just the fact that gold has been ripping like no other, and this is a healthy breather. Maybe the reason gold's taking a bit of a hit right now is a combination of all of them. I'm just trying to give you the potential pieces of reason, but at the end of the day, the reasoning of why people buy and sell doesn't really matter. What matters is that they are. What matters is the equilibrium, that perfect crossover point between supply and demand, which is price. So why we're trading higher, why we're trading lower, yeah, it kind of matters, but what matters is, are you on the right side of the trend? For you to be able to explain why something is going up or down, yeah, cool, that might make you feel a bit more comfortable, but what actually makes you money is being on the right side, as in making a position and then it trending in your favor from the moment you made the position. So I want everyone to feel a little bit more comfortable, because I know there's a lot of gold bugs in the audience who have been riding this higher and higher and higher, and obviously a huge congrats to you. This is a massive pump. You deserve all that money. But also be careful, because when things fall, there's a very important reason why we have that saying, stairs up, elevator down, because when it falls, it can definitely fall. Now, do not interpret that of me saying this is about to fall all the way back down. Of course, it might happen, but in reality, you just got to play the price. If we start to crack, if we break the trend, yeah, maybe take your money and move on. As long as this trend is intact, I don't see any reason to really be getting out. So anyway, just wanted to tie that together, but please remember, for this week, in terms of major macroeconomic reports, Friday, October the 24th is going to be by far the most important one, coming out at 8:30 a.m. Also, just a friendly reminder here that we are getting earnings. Coca-Cola and GM reported this morning. After the market closes today, you're going to be hearing from Netflix and Capital One. And then tomorrow we have Tesla and IBM, along with QuantumScape. And then later on this week, American Airlines. You're going to have Intel, Alaskan Airlines, Ford, P&G. So you might be wanting to pay attention to those. But for the ones that we got the numbers this morning, once again, pretty good. Coca-Cola tops earnings and revenue estimates, but say demand for drinks is still soft, no pun intended. And then for GM raises guidance after beating Wall Street expectations and lowering the tariff costs. So across the board, well, not across the board, the general trend of this earnings season is a beat. I'm not saying every company has beat. Of course, you could find counterexamples, but in a generic sense, the average result for this earnings season thus far is a beat, as in individual companies, the bulls are in control. Obviously, coming back to the overall market, we're seeing that the bulls have once again regained control. It was a little bit questionable, but we're now knocking on the door of this breakout. Technically, it hasn't happened yet, and of course, it could get rejected here. In fact, we saw that not so long ago. Remember in April when we had this actual record-breaking recovery day? We recovered, we dropped, we bounced all the way up to it, then we faded for a week, and then we really got going. So just because we're there now, it looks kind of similar. We drop, we pop, we pull back, it gets rejected. Of course, that could happen. You probably don't want to give up 6,600, and in reality, I actually don't even want to give up 6,700. But just because we're knocking here doesn't guarantee the breakout. In fact, I'd give it about a 50-50 shot, and it's really going to be hyper-dependent on what happens with the CPI meeting results this week and the FOMC meeting next week. That's probably what's going to decide if we break out or not, just to be completely honest. But overall, I admit it looks good. We have higher highs, we have higher lows. We are above all the major EMAs. Price momentum is strong. And then when you look at the options market, which we really haven't talked about, all of a sudden we are returning to the same concept that we had in that post-May market rally, where we had a bunch of positive gamma beneath and a bunch of negative gamma above. That is bullish. That means that the dips will be bought most likely by market makers, because this is all positive gamma. And when we get going, due to the fact that it's negative gamma, we can really get going. This setup, positive gamma beneath, negative gamma above, that's pretty much what we had in this entire rally. So I just want to pull that out. Point out the fact that, yeah, things have been rocky ever since 2 Fridays ago, but the recovery has been pretty quick. On an intraday basis, you want to see a push and hold above 6,740. It's pretty evident. You have some positive gamma there. And then from there, we're just kind of watching every $10 rung all the way up to 6,800. But the further we go, the more and more negative gamma it gets. And as we trend that way, that's going to push it higher and higher and higher, because people are long calls. They're going to go from out of the money to in the money. That's going to change how the market makers makers have to hedge out their delta exposure. They're going to do that by buying the underlying, whether it's SPX, SPY, or ES, thus pushing it higher and higher and higher. But that breaking point between negative gamma and positive gamma on a 0 DTE basis is 6,400, which is exactly why we have this all marked out today. As I always do, I mark out the previous high, low, and close. That is the green, the red, and the white line. The white box is the transition zone, bullish above, bearish below, choppy within. And then the final thing are these yellow lines, which are the major open interest levels, as in where we see large players or in aggregate, a bunch of money betting on those individual strike prices. So i.e. levels of potential reaction, whether it's a breakout, breakdown, liquidity sweep, a fake out, whatever it is, it's levels where you want to be paying attention. So overall, coming into today, looking at the daily structure, looking at the price structure, looking at price momentum, looking at options flow from yesterday, and looking at the option structure as of this morning, my bias is bullish. But as quickly as things have changed, obviously, the situation is dynamic. So as it develops throughout the day, yeah, I'll let you know if my opinion changes. But as of now, as of market open today, Tuesday the 21st, my bias is bullish. And my bias would switch a little bit if we break below 6,700. I want to let you know that. Obviously, on the 0 DTE perspective, that gets a little suspect. And then on a swing perspective, it gets a little bit worse. And by a little bit, I mean a lot of bit worse, below 6,650. So below this value is where swings get questionable. Below 6,700, at least in my book, is where intraday trading gets a little bit questionable for really the bulls losing their footing. The bulls would legitimately gain more footing above 6,740, and then specifically above 6,750 sets up a test for a new all-time record high. So that's your bull case. There's your bear case. You obviously have your neutral trophy case, and that's how we're going to see it playing out today. That's exactly how we're going to see it play out today, or at least those are the levels I'll personally be paying attention to. So with that all in mind, let me get ready for market open. Hang on. All right, so we're there. We have our levels. Great. Let me drop this to the 1 minute. Let me drop this to the 1 minute. What equities do you guys want up here today? Apple had a great day yesterday. Maybe worthwhile to watch that. AMD had a pretty good day. We could keep up gold. We could watch vol. What do you guys want over here? Obviously, just for market open, we'll watch the S&P 500 and the NASDAQ. SPY slightly green, Q slightly red, but obviously we're pretty much just break even. What do you guys want over here? What are the big ones? Amazon is looking good. Is it actually? It was up 1.6%, up another percent this morning. Apple gained about 4%. You guys want Tesla up? More than happy to do it. Tesla gained 1.9% yesterday, a drop of 0.4. Watch for that breakout at 450. One that I thought looked interesting yesterday was actually Robinhood. That's probably one that's worthwhile to have on your watch list right now. So more than happy to switch it. Just obviously as things get moving, feel free to shout them out to me. More than happy to put whatever you guys need me to put on the screen. And actually on that note, I do want to let you know I was good. I didn't do any trades early this morning. All my accounts are flat. I set up a lot of different strategies today. A lot of different strategies. So we're trying to get away from some of that density risk, and we're going to be trading many different variants of Icarus. Actually, I kind of took Icarus and split it up into different styles, if you will. So we're going to see how the independent styles play off against each other. Dingity ding ding ding. The world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. Here we are, a beautiful Tuesday, a beautiful day to be in the world's largest casino. The SPY and the Qs are right at their closing value. I have the post-market high and low marked out on NQ. I have all the key levels already for SPX. Let's actually go to the 1 minute on this. Let's see where we're at. Here's the overall, maybe it is better on the 10 minute. This box right here is literally just the overnight trading session high and low. The high or the low, one of them, an or statement, is taken out upwards of 90% of the time. So depending on the trend, those are good target levels. Recently, I've been doing more and more research on trading the initial balance. For those of you who don't know what that term means, the initial balance is the first hour of regular trading hours, RTH. It is the high and the low from 9:30 to 10:30 Eastern. That is the initial balance. The high and the low from 9:30 to 10:30, the first hour of trading. Recently, I've been doing a lot of studies on it just because I read one book where this guy's like, yeah, I've made millions of dollars trading the initial balance. And whenever anyone makes that amount of money in a relatively quick time frame, of course, I think that deserves extra research and maybe just a little bit of extra analysis. So I got interested in it. And I have to admit, even though I'm not completely done with all of my analysis, the stats surrounding the initial balance, once again, the first trading hour of the day, 9:30 to 10:30 Eastern, are kind of fascinating. And I was curious, do any of you in here actively trade the initial balance, whether on ES or YM or NQ or SPX or NDX or RTY? Are any of you in here self-identified as initial balance traders? Because if so, I have a few questions, but also if not, that's cool too. We can chit-chat about something else. LOL, Matt only read one book. No, not even. I can't read. Come on, Trex. Let's be honest. Don't give me the benefit of the doubt. You think I know how to read? Come on. You've been here long enough to know that I don't know how to read. I was never hooked on phonics as a child. Caleb Hills, you trade it every day. So when you're saying you trade it every day, can you give us a general sense? Are you trading with it? Are you fading the initial balance? Are you waiting for the initial balance to break and then you're selling premium? Are you waiting for the initial balance range to form and then you have a sitting buy order or sell order halfway through, depending on the trend? What's your overall? I'm always unbalanced. I tried the 30 minutes. So that's more commonly referred to as the opening range, is the OR, commonly the OR, the 30-minute Orbo, which can totally be profitable for sure. No, but I'm currently making a bot to test on that exact strategy. Shout out, Scott. The initial balance, there's a lot of interesting stats. And hey, don't let me get in your way, Scott, but just because I've already done quite a bit of research on it over the past couple weeks, your starting point, just to save you time, will probably be better off once you form the initial balance, the 9:30 to 10:30 high. A good starting point is going to be to look at fading the first break. So let's say you have that high from 9:30 to 10:30, and at 10:45, you're either testing the high or the low. Fading that move seems to have some interesting stats. And then past that, once you have your range, depending on which way the range was formed, did you trade up into it or did you trade down into it, going in that direction, but waiting for a 50%, a 50, a 50% retracement also has some interesting numbers around it. Just to help you maybe start off on the right foot there. I coin flip and then do the opposite of what Matt does. But what if I am doing what the coin says to do or doesn't say to do? Is there any logical, issues with that? Is like, what if you're doing what the coin says, but then I also do what the coin says? Are you then going against the coin? I would tell you, Matt, but then you tell me to shut up. Randy, you'll get over it. Seems like the move right now is quantum puts. Yeah, finally. I mean, after a never-ending push, quantum is showing a bit of weakness, but who knows? This dip might be bought. I mean, I have breakdown alerts, but after a huge rip, we're seeing some shorts come in. We're seeing some profit taking. We're seeing the whole gambit, but there is definitely more aggressive selling than there is buying. If you were playing this, you should already be out. Because remember, you could always re-enter. If you were riding quantum to the upside, I have no clue why you're still in this because you're risking an additional breakdown. I probably would have really been ditching this between Thursday and yesterday. I would have been locking in. And even if you want to be bullish, I'm not saying it's not going to go again, but why risk a continuation? Why not just say, okay, I'm going to wait and see. And if it bounces, great, get back in. If it bounces from here, okay, you could get back in. And if it keeps speaking, you're good to go. But yes, for the first time in quite a while, we're actually seeing, it's definitely bucking the trend that we're seeing a bit of bullishness. I already have PTSD. I wish I knew how to read that, Trex. I would know what it potentially did or didn't mean. Tarot Tuesday. I don't actually know where the tarot cards are at this moment, but I could just make up something. I could always make up something. I'm getting an alert on Netflix early this morning. Potential higher low leading into a breakout. So you had one low here roughly in early October, then another one recently in mid-October. So you have a higher low, and now the fact that you took out this high means you have a higher high. So this might be a change of trend, because clearly we had lower highs and lower lows, a little bit of a switcheroo here. Things then really got hit, an overshoot in our early October, and a bit of a recovery right now. To be completely honest and transparent, I am not playing Netflix at this moment in time, but obviously I just want to let you know about a potential trend reversal on NFLX. Oklo is getting hit, down 6%. HUT is down 3%. Qubits is down 3%. Open is also looking pretty weak. AMD is green, hit an all-time high yesterday. Palantir going sideways, doing nothing. Tesla putting in a higher low. Look for that breakout of 450, 454. Apple hitting an all-time high yesterday, about to hit another one right now. Microsoft trying to put in a higher low. Look for that follow through above 520. Look for the test of 524. Nvidia kind of going sideways after hitting an all-time high. Bitcoin try to recover, and now looks like it's putting in a lower high. Obviously, maybe just pay attention to 106. The Russell, there is a downside gap fill. The Qs are looking good. The SPY's looking good. Obviously, both still have a downside gap fill. And really, where we're at, 6,740 right here, 6,740. Is anyone surprised? Not only is it the top of the transition zone, but the reason it's the top of the transition zone is because of this giant gamma node. This is, in my book, as long as this position holds where my cursor is right now, that's going to be the kind of the decision of the day. Above it, bulls are in control. Below it, bears are in control. But once again, on a zero DTE perspective, I'm just watching this giant node. It's not crazy to think that if we get above it, we could fall down the mountain. But if we break below it, well, we could fall down the mountain the other way. So I'm just watching 6,740 out of the gate. Speaking of that, let me show you guys the options flow. Dude, I feel like this weird thing in my shoulder. S&P 500 options are bullish, clearly. All right, guys, remind me to not fight the trend, please. You guys didn't do that yesterday. You were more than willing to, I guess, revel in my stupidity as you guys, I even explained it. I even explained how the trades I was doing were like actually clinically stupid, like medically. If you were to measure it, I don't mean it like rhetorically. I mean medically, what I was doing yesterday was dumb. So we're getting a breakdown on quantum computing. That's what those alerts are right now. Qubits breaking down, Rigetti breaking down, IONQ breaking down. So quantum, you're seeing that. You're seeing the expansion pattern where you get the higher highs and now the lower lows. You have profit taking. I'm sure you have people buying puts. I am sure you have people finally shorting. Martin Shkreli is probably happy because he's been short this forever ago and he's been taking a lot of heat. But look at IONQ going from 84 down to 58. Rigetti, 58 down to 41. Qubits going from 46 down to 32. I think Open's going to break down as well. These are all just like crazy retail FOMO hype plays, and this is how they all end, folks. Like, I mean, if you've been around the block once or twice, this isn't going to be surprising you. When things get such an elevated value, they just don't hold. The craziness can last for a while, but eventually gravity wins out. Matt, why were you doing stupid trades? I don't really know. I have a feeling I think I went on tilt because of the AWS thing, because coming into the day, I was swinging puts for protection over the weekend. So when the weekend was over and we were gapping up, I wanted to get out of the position. I couldn't get out of the position on the stream because my app was down and I had to call in, but I couldn't do that because we were on stream. So I think what happened subconsciously and consciously was on my short-term trading account, like my futures, like day trading, scalp trading account, I think I was only expressing a bearish opinion and bias because I wanted my swing positions to not get completely pulverized, which was clearly a misstep on my situation. But as a trader, one of my biggest issues with day trading and scalp trading is having to go in the opposite direction of what my swing plays are. Because I know if I'm hitting on one, that means I'm inherently losing money on the other. And in my mind, I want to be making money on both. And once again, this is a psychology issue, and this is poor math, it's poor logic. I get that, and I'm not disagreeing with you. You could easily say, yeah, but Matt, if you're making money in 10 minutes on NQ to the downside, what's that have to do with your swing positions? And you are 100% correct, or vice versa. Obviously, that's fine. But I was thinking about this a lot last night as I was like documenting my trades and even trying to figure out if I got out of my swing positions, because once again, I had to call into the trade desk and it was like such a fucking nightmare. But when I was trying to really break it down and I was thinking about it while I was eating dinner last night, I think that was the major issue. Was I do not do well with my day trades going in the opposite direction of what my swing trades are, which oddly enough is exactly why my bots still do well, because my day trading bots have nothing.
Order
Speaking
submitted.
of which, we have some stuff going on.
Target filled.
What was this one? Okay. Yeah, that was a little super trend breakdown trade. I'm trying to figure out what the account was. It was it was all these right here. So that trade 1, 2, 3, 4, 5. So $350. It just took this super trend breakdown. Super trend is a common indicator, but yeah, it just took that breakdown right there and locked in. So 350. But anyway, right there, like, I don't know. This is actually a real-time example of what I should be doing, because I believe, and I'm not even 100% sure about this, I believe I now have swing calls from yesterday. I don't really know. I'm waiting on the confirmation from the trade desk and everything, and I have to check my email because I think I should have received it by now. But even with that, I'm swinging calls for later out. So because of that little breakdown trade that I just made money off of, which was statistically backed, like I have all the odds of what happens at 9:40 in the morning. If you're snapping the super trend and you're below the EMAs, the advantage is to the downside. It's really tough for me on an individual level to manually trade that to the downside when I know I have swing calls. Once again, this is just a bit about me, and I hope you don't have the issues that I have, because the issues are fucking brutal. But I have a really, really tough time trading my day trading account in an opposite direction of my swing account. I know it's kind of a silly issue. I'm just, I guess, trying to be honest and transparent about the issue I have. And to many of you watching this right now, you're going to be like, hey, man, why? What are you doing? But I think there's a few people in the audience who most likely have the same issue. And if you do identify with that issue, dude, I feel for you. I'm there with you. I'm also in that purgatory. It sucks. It's not fun, especially days like yesterday when I'm articulating to all of you. I mean, you could rewatch the show of how the long trade was the trade. The trade of the day yesterday was one of two things: either going long or doing nothing and waiting for the gap fill. But at no point was it smart to actually go short based on the real-time information we had. And the only reason I did it was because I was like, in a weird way, praying that my swing positions would work out. And it was just silly and a misstep. And maybe you're watching this and maybe you've had that issue, and maybe you figured out some sort of monk-like discipline that always allows you to trade in that account the direction you should be trading in that account. But the only solution that I have found is I have to automate the trades. I have to let the robots do it, because even that trade right there that was just taken and it made me $350, 1, 2, 3, 4, 5, made me $350. I would have never manually done that. Well, first of all, it's because I was chit-chatting with you guys, so the chances of me being quick enough to take advantage of it would have been relatively low. But more important than that is I wouldn't have wanted to do a counter trend trade to my overall position. Do you believe Tesla is hitting 395 after earnings? Old gap fill. This idea of believing a price goes up or down is stupid. You're attempting to predict, and that's a silly thing to predict. Just react to it. React to higher highs and higher lows, lower highs and lower lows, react to potential buying there. This idea of trying to predict those types of things, you're going to lose money. You are 100% going to lose money. If you are predicting in this game of trading, you're going to lose money. I promise you that. I promise you, absolutely promise you. What you should be doing is reacting. Set up alerts at what you identify as key levels, whether for trend reversals or continuations, and react to those developments. Don't just sit there and be like, yeah, no, I think this is going to happen. It's a really, really silly fucking thing to do. I am indeed losing money. Yeah, it's just because, and I don't really blame you. I feel for you because we've all been there where you're losing money. I feel for you without a doubt. But I think it's because a lot of the people who have some of the biggest voices and microphones in this space, I definitively know they are teaching you how to trade incorrectly. There are too many gurus and furus who have no single stat, facts, or figures for their trades. They'll explain a trading concept to you, but then when you ask them, you're like, well, how often does it work? When it does work, what's your average win size? When it doesn't work, what's your average loss size? What are your year-to-date performance? What is your 2-year, your 3-year, your 5-year performance? When you start to actually dive into anything truly related to performance, they get weird and they don't tell you. They're like, nah, I have to trade a paper account because of reason XYZ. I can't show you my real account. I can't show you my year-to-date returns. I can't be honest about my winners and my losers. I can only fabricate winners to you. They always come up with these bullshit examples. And in reality, just be honest. Just be honest. There is no such thing as a trader who wins every single day on every single trade. It does not exist. You can have periods of success and periods of failure. But folks, I am telling you, there's no single person on this planet who is day trading every single day, making money every single day. There are periods of success. Like you could be like, yeah, dude, I'm on a hot streak, 1 week, 2 weeks, 1 month, something like that. Those exist. But this idea of someone can get into the market every single day, make money every single day for a prolonged period of time in excess of multiple months, multiple years, it doesn't exist. I'm telling you, do not fall for it. It does not exist. And there are many reasons for why it doesn't exist, but even on the off chance that it did exist, do you really think that they would be explaining it to you? Do you really think they would just be giving it away to you? It doesn't happen. Nancy, see, people always say that, and I feel like you're just not having an appreciation for what I am saying. Nancy Pelosi's not a day trader. Like every time I bring this up, people say, but what about Nancy Pelosi? Nancy Pelosi doesn't day trade. That has nothing to do with it. How do you mark out SPX levels that correlate with SPX? Well, the correlation between SPX and SPX is 100% because SPX is SPX. So there's that kind of a weird question. Any underlying has a 100% correlation with itself because it is in fact itself. So there's that. There are profitable day traders. Not that I've known for any serious period of time. I know of some profitable day traders. And like when we're talking about this, let's be very specific. We are defining a day trader as a person who gets in and out that same day. I'm not talking about in today and out in 2 days. Now we're talking about swing traders. But as a person who gets in and out that exact same day, the people I know of who do it, most of them are premium sellers. None of them are going long 0 DTE calls. None of them are going long 0 DTE puts. Of course, there are periods of success, but I have never met a person who goes long 0 DTE calls, long 0 DTE puts, and is profitable for any period longer than a year. It's all shorter than a year. Yes, there is. Check out SPY day trading. No, there isn't. There isn't. Do you know how many people in this space have put out rewards of saying, hey, just show me your broker statements as a day trader for being once again, a day trader? Very different than swing trading. Right now, in real time, if anyone, there are challenges out there of show proof of you being profitable for 2 years of day trading, and not only would they give you money, but they would also donate to a charity, and no one's taking it up on it. And all you have to do is show your brokerage statements. It does not exist. How do you correlate with NQ to mark those levels on the NQ chart? Well, NQ and SPX are two completely different things. One is the NASDAQ and one is the S&P 500. So all these stock groups are fake? I don't know. It depends. Are they swing trading? Are they investing? Day trading groups. Ask here. It's easy. Don't take my word for it. For anyone who tells you they are a profitable day trader, ask them for 2 years. Be like, okay, I want to know how you've done in 2025. I want to know how you've done in 2024, and ensure that they're not counting any swing trades. It is much more likely that they are profitable as a swing trader if they are profitable at all. But as a day trader, as a person who gets in and out on the exact same day, you're probably not going to find it. He's not going to he shows P&L every day. That is not what I'm saying at all. I think you're having a big misunderstanding of one day's P&L versus 2 years worth of data. What's common in this space is when you're winning, you show those wins off, and when you lose, you just don't show it that particular day. So it creates this facade of always making money. Warrior Trader is profitable. Yeah, you guys brought that up recently, but when I looked into it, there was actually swing trades involved, so I don't really count that. He does, from what I saw, have day trading and swing trading, and what I saw was being reported, and I 100% applaud him for doing that. At least to what I saw, there was the mixture of the two, and I'd be very, very curious of what it is like with just the day trading. But once again, I do applaud Warrior Trading for at least putting his information out there, because most people don't do it. Most people do not do that. Warrior keeps resetting his accounts. That might be true. That might not be true. I'm unaware. I'm not part of the group, and I don't have the information. I can't comment on it. If he does that, that's messed up. But also maybe you're inaccurate. I don't know. Ross is audited. But once again, you guys, you're really missing out on the point that I'm talking about day trading. Can you provide those 2 years of data, Matt? No, because I don't day trade for 2 years straight like that. That's my point, is I found much more success for swing trading. I could provide the information for swing trading, but for day trading, first of all, there's going to be different brokerages involved, but even when you do that, I don't even think the only success I really have day trading is you could take advantage of certain things related to the sim to funded world and futures, because the risk reward is skewed, hence how I got paid out $250,000 on Apex this year. But my real success day trading is selling premium. It's being the insurance seller. I wouldn't be able to produce 2 years of track record of buying 0 DTE calls or buying 0 DTE puts, because I don't do it, because the math tells me I'm going to lose money. Day trading requires extreme discipline most don't have, and beyond that, quite a bit of luck and also a knowledge of what to do. And I'm not like, hey, dude, if you want to be a day trader, if you're coming in here and you think I'm pissing in your Cheerios and you're pissed off and you're like, I want to be a profitable day trader, yeah, I'm telling you the recipe of how to do it. Get really good at selling premium. Right there. One of the major things you can do is sell premium. That is right away, that's going to dramatically increase your chances of being successful. Is it going to guarantee it? No. But if you are a person buying 0 DTE calls and 0 DTE puts, the first thing you can do starting today to dramatically increase your chances of success is, instead of buying calls and buying puts, sell calls and sell puts. Like right there. That's one of the first things you could do. Do you do spreads? Well, when I sell premium, that's what I'm going to be doing on a 0 DT basis. I do credit spreads. It's either SPX, SPY, QQQ, or NDX credit spreads. So basically, equivalent to the world of sports betting, it's over and under bets on like the total score of the game. So for example, right here, you could get a put credit spread at 6. Hang on. We're live.
Target filled.
We're live. Right here. It took the super trend breakdown again. We're below the EMAs. We cracked the super trend, and let's hope that it's not a bit of a fake out. It already seemingly locked in one of the positions. It must have gone short two, locked in one, and the other one just didn't get a fill. So hopefully this isn't a bad beat. Filled. And there we go. 200, 200, 200, 200, 200, 200. Looking good. So 200 on 6 accounts. So that's $1,200, and then 350. So we're up to about $1,000 right now. Not a bad day. Not a bad day thus far, but let's see how it goes. What was the question? Oh, spreads. Yeah. So let's say you felt really confident that you're like, I don't know where today's going, but I feel really confident we're going to close above 6,700. You would just sell the 6,700 put. You would just sell that put, and you would basically profit all that credit that you receive from selling the put as long as we conclude the day above 6,700. It doesn't matter if it's by a point. It doesn't matter if it's by 100 points. It's a binary bet. Either we did close above or we didn't close above. So that's what I'm saying. It's equivalent to betting on the over under in a football game of just like, nope, either we did get above it or we didn't. It doesn't matter by how much. So that is one way that I would say you could, well, not I would say, like the math supports it. You would dramatically increase your chances of being a successful day trader by selling premium, without a doubt. How come your accounts are working individually these days? Because this time around, I decided to hook up different strategies because I was pissed off at my performance from yesterday. Whoa, this one's a big one. What the fuck trade is this? I'm just trading different strategies, different variants of Icarus. Actually, different subcomponents of Icarus separately is what's going on right now. Do you manage the spreads with stop loss? You can. That's up to you and your strategy. And to clarify, just because you're trading spreads doesn't mean you're going to be profitable. It just means you have a higher likelihood of being profitable than engaging in the market in a different manner. I think that goes kind of without that's just obvious. Bot goes short. Yeah, bot went short on 1, 2, 3, 4, 5, 6, 7, 8, 9 accounts. Actually, it took the Orbo breakdown trade just now. This is the video that we've been making in the background. That was this trade right here. It's short at 216, and it is going for 13. What in the world is happening with momentum right now? 5-minute, 10-minute is bearish, but the 30-minute is testing. That concerns me a little bit because it could easily bounce here. That's just an important level. 5-minute, 10-minute, 30-minute is breaking down, which is why that Orbo trade with the new filters I added in finally took it. Now, you might be thinking, Matt, why didn't you take the Orbo trade right here? And the answer to that is it's because the momentum wasn't strong enough to the downside. So basically, I kind of already showed you guys of how the Orbo trade isn't going to be net profitable in the long run if you take every single Orbo break every single day, but you can make it profitable by starting to add on additional filters. And the filter I added on was, okay, it has to have momentum in the direction of the Orbo break on the 5-minute and on the 10-minute. And it finally got that when it started to break down right here. Unfortunately, as of this moment, at least, it is running out of steam. And I'm confused why Icarus took the trade as well. It might have gotten in at a different point. Hang on. Icarus. It didn't. It got in at the same point. I'm not the biggest fan of that. And why I'm not the biggest fan of it, and this isn't taken into the calculation, obviously this still might work, is right here. We're at support on the ES contract. We're at that 50 EMA. There are many people who decide to be dip buyers right at that level just because it's small risk. You risk the recent low, and if you're right, you get to ride it all the way back up. But let's see. Maybe Icarus knows something we don't know today. The only one I trust is Matt. Well, 50% of the time, I'm right 100% of the time. What I'm confused about is these right here, they're going for small profit targets. What I'm confused about is this guy. Jesus Christ, this one's reaching for it. This one has a much wider stop and profit target than before. I'll have to dive into that data It's probably because of how big this ATR is here. We just had such a move that I guess percentage-wise from 16 to 200 is not that big of a deal. See how the target is right above that key psychological level? 200, the target's at 200.25. We'll see. Can we get the flow? I'm assuming it is not good at this moment. Mag 7 was good up until 941, got hit. S&P 500, similar situation, good up until 940, getting a bit hit. What I would love to happen is for us to just bounce and viciously rip off of 200. That would make my life a whole lot easier, because if this is just a double bottom here, I might be a little bit screwed. But we'll see. I'm going to give it a second. I actually might lower the risk on all these trades, obviously, to this recent pop right here at 42. I might take a little bit more risk off the table. Here's what Bookmap's looking like. This is another reason why I'm confident in 200. You can see all the sitting buy orders right there at 200. And then there's even people trying to buy at like 87 and 85. But right here, this giant node, you guys probably can't see it. I'll move myself over. See this giant buying node? There's 161 contracts, sitting passive buy orders at 25,200. Is there anything special about that level? Nope. Just psychologically, people like to play
filled.
it. All right. We're starting to get some of that money. Starting to, at least. Some of it got locked in. And others of it did not. Well, which ones got locked in? All right. So some profits were taken, and it looks like some... Well, that's a bummer. Once again, off by a tick. Well, that is just an unfortunate beat relative to slippage. That's an unfortunate beat. The one that I'm still curious about is right here. So some money just got locked in somewhere on some of the accounts that I guess had a quicker fill. Maybe. Oh, some people are trying to defend this level. 609.50. My spidey senses are starting to tingle. Because it's just, I wonder if we're about to get the 10 a.m. reversal before I lock in my money. We get a flow alert right there. I'm going to give it a second, but this high that we had at 10 a.m., I'm not the most stoked if it is broken, so I might have to intervene, but we're going to give it a second. We're going to give it the old college try. The trend is to the downside. 5-minute, 10-minute is bearish while the 30-minute is testing. 5-minute, 10-minute is bearish, and actually now the 30-minute is also bearish. So let's see if we can recover out of that. If we do, if we start to push this 10-minute EMA cloud and actually get above, basically, if we take out the intraday high, I think it's actually going to be a nice day. Because that probably means the SPX level is breaking the 6,740 key area. But we might need to revisit 25,200 first. So let's see how this actually ends up going. And obviously, if you were playing the low here, that was a good trade. You probably already locked in. Maybe you have a runner. But we did break the overnight session low. We have some support right where we bounced. Yesterday, this is where we had a little bit of a hiccup. It's finding support there. Maybe we don't touch 200. I would find that to be a bit rare. Just you would think. But hey, buyers are stepping in early. I mean, there's a lot of orders there. They haven't been pulled yet. There are some at 210. You have some here at 200 flat, and then some here at 188. So I'm kind of watching these zones of buying. I'm surprised. I guess you could argue this first one did get tested, but it doesn't look like any of these. Well, we know they didn't. None of these orders got filled at 200 flat. None of those orders got filled. We did just take out that high. Do I want to kill it? I'm watching this super trend flip back over, and I don't know. I'm going to give it one quick second, but I might de-risk it more than the bot even wants it. Because if this starts to bounce back, it could be crazy. It could be a wee bit crazy. Let's see. I'm giving it a second. I'm just watching if it somehow gets pulled right back up into this zone. Which, this is kind of earlier before what I was talking about. Of, I want that to happen because of my swing positions, but now I'm getting torn in the other way because my day trading positions want us to actually touch 200 first. And I do not do the best with being on the opposite side. I do not do the best. Do I want to intervene? Do I want to intervene? I'm thinking about it. For those of you who are maybe curious about what the risk to reward is on this, it's a 3-to-1 risk to reward. But really, I guess you could consider it a 6-to-2 because there is a scaling out mechanism because it is 2 contracts. But let's see. I'm watching if 50 here gets rejected. It actually might be easier to discern this. Oh, you have a little bit of selling, but what I find confusing here is there's still quite a few buyers at the 25,200. They have not moved that order. It's about 171 contracts. The point of control in VWAP is all the way up at 280. We're currently trading at 246. The buyers are at 200. So we're back to another day of larger ranges for sure. I wonder if this is, are they going to just try to waterfall this down to 200 and get this filled? Watch the 200 level, folks. I'm telling you. A little bit of a bounce. There are some people at 210. Once again, if you see the heat map and it's below current price, those are sitting buy orders. And if you see the heat map above, those are sitting sell orders. So you have sitting sell orders at like 40, whatever this is, 48, and you have some at 54, and you have quite a few buy orders at 10, and the most is obviously here at 25,200. So that's kind of what I'm watching. I'm seeing to see if that gets absorbed and if we actually break or just bounce right off of it. Patience. Let's see. Can you adjust your buy and sell on the same chart? No, because these aren't buy-ins. Well, it's the colors related to how many orders are there. Obviously, you can't be buying above. Like, think about what that would mean. Obviously, below it has to be buy and above it has to be sell. Like, clearly, that's how like a bid-ask spread works. The color has to do with how many orders are there. Think out what you're saying, Mark. The color, yeah. The color changes based on how many. It gives you an idea of the size.
Order submitted.
Whoa. Did we go
Target
short
filled.
more? Something just locked in. Oh, brother. Yes, something took that short really quick. It right here. I mean, we traversed back across all the EMAs and it's in phase with the 5-minute and the 10-minute. So it took this short as soon as that bar opened and fortunately got its profit pretty quickly, but it was just waiting for the failure of the EMAs. And I would prefer it get in one bar earlier. Granted, this trade worked anyway, but I would prefer that it react a bit faster. But as of now, just range bound. If I could wave a magic wand, I would see it dip down to 200 and we would find support there and then just rip higher for the rest of the day. Like I said, if I had a magic wand, that's exactly what I would make it do. But unfortunately, I do not have a magic wand. Unfortunately, I do not. But overall, I mean, if I zoom out, you could see slightly trending down, but kind of just range bound here. And that one locked in. This one is the extreme target at 200. I kind of want to move the risk lower because I've not the best vibes that if we break this, it feels like we're going to go to 65 and hey, whatever. Maybe you could argue with me of Matt, it's 50-50. Don't say it feels like that. And yeah, you're 100% right. But it's just right here, we would have a higher low. If we break that, that's a higher high. So I don't know necessarily if I want to be holding a short into a trend reversal. What I'm confused about is why some of these are locking it in so quickly and other ones aren't. Like, what the fuck is this one looking for? This is the one that it was literally a tick away. So it got as low as 12 and the order was pending at 1175. Gap fill below, weren't you saying high statistical likelihood we see that today? Yeah, obviously not a guarantee. There's a high statistical likelihood we were going to see it yesterday, and that didn't come to fruition. Right now, it's pretty indecisive. I would say we had a slight trend down this morning, and now the market doesn't know what it wants to do. SPY going up a little bit, Q's more so sideways. Just wait. Here's a look at the flow. Mag 7 was strong until 941, getting hit till 1010. Maybe it recovers, maybe it doesn't. The SPY dipped until this flow alert at 10:02. We might be seeing the 10 a.m. reversal, and I'm trying to be cognizant of that because if so, I'll just cut my positions and just turn Icarus back on and let it play in the long direction. Do I run these locally? Yes. It's easier to run it locally. I would argue that probably a better system would have it running on a cloud just in case your own stuff goes down and you have a failover, but I run them locally. Bearish, attempting to save bullish, definitely still bullish. So we have a little bit of a mismatch between the shorter time frames, the 5 and the 10 and the 30 and the 4. Bearish. Well, that one broke, but a recovery of 61 gets interesting. This is still bullish. All right, so the 5 and the 10 on the S&P 500 and the NASDAQ is bearish. 4 hour on both is bullish, and then the 30-minute on both is a bit questionable. So we're in that awkward in between. Is this the dip to be bought, or are we actually switching? But I'm seeing a higher low here, and I'm about to see a higher high, which makes me kind of want to ditch all of these current plays because just the risk reward of it isn't worth it. It could live to fight another day. I think I might need to cut these positions. Yeah.
Order filled.
All right, I'm stepping in, and on this trend reversal, you have the higher low. You now officially have the higher high. It is not worth it in my book to still be messing around there. Of course, it could dip right here. This could easily be a fake out, and it could puke. But the other situation is it could rip, and then the accounts are gone. Which, why would I do that when they're all still manageable? So thus far, the ones that worked today were very, very quick to react. And the ones that had the larger targets because we stopped dipping are the ones that thus far took a hit. But let's see. There's time left in the day. There's a lot of time left in the day. Yeah. I mean, you could argue that 1010 was a higher low and we just made a higher high right here. You could argue 1010 was a higher low and we just made a higher high. Like this, we might be seeing the start of a trend reversal. So if you're still bearish, you'd want to see the breakdown of that 1010 low because that would be a fresh low. And then if you are bullish, you would want to see price take out the recent high at 953. So that's kind of the watch I have them marked out on both the SPY and the Qs, but maybe I shouldn't have overridden it. I still think it was the right play, especially given the fact that we've been seeing so many 10 a.m. reversals. And even look at this right there, 10:02 flow alert. And ever since then, we've been popping. So there was two possible outcomes. I could have held on to the accounts and maybe I get lucky and it comes down to my profit. Great, I'll make some money. The other situation was, what if this breakout keeps going? Then that in that situation, I lose it. So I met myself in the middle and said, okay, just take the small loss now, ensure that the accounts are alive, and you could just keep trading them. Which, yeah, whatever. Maybe this dips, but as soon as I saw that potential new trend right here at 1014 taking out that recent high, it feels like now I went from being with trend to now against trend. Looks like the 30-minute saved itself. And even here, if you see NQ recapture 60, that's pretty bullish, man. So I'm watching this closely. If you're taking this, your risk is unfortunately pretty far away at 17. But if this starts to recover, look at that. Yeah, we just took out the next high on the SPY. The next one is this red to green test. This is exactly why I got out. This is 100% why I got out. You could even watch this low now at 1016. Oh, brother. Are these all turned off? They are all turned off. Interesting. Interesting. Oh, do I want a 57, 50, 10 points, $200? Super trend did go green. We did bounce off of that. I'm going to wait and see where the next, if we have the next higher low. I'm going to wait and see what the next higher low is looking like. What is this? 030. So we pump, we pull back. There is resistance here. So 80, what is VWAP? VWAP is roughly 76 maybe.
Order submitted. Order submitted.
$77 is VWAP. This high is 83. Sorry, this is probably really messy. Right here, this white kind of dash dot line, that is your VWAP, your volume weighted average price. It's basically the average price that things are transacted at today. So right here, 76. But then this green line is the POC. As you can see, that is your point of control. That is where most trades have taken place. So they don't have to be the exact same. They're commonly in the same zone, but they don't have to be. Come on, lock it in. No, is it going to be one of those days? Oh, fuck me. 79.75. Is there like some sick joke going on that I don't know about of why this shit
Order
happens?
filled.
All right, cool. Locked in one, have a runner. Try to make some of this money back. We often hear point of control. How do you measure it? It is literally the whatever exact tick has the most volume traded at it. That's what the point of control is. I would not be able to manage all these bots. I can barely manage my pet cat. Brian, I'm right there with you. I'm right there with you. Right there with you. So I just arbitrarily put this pending order at the high. What was this? 15, yeah, 14, something like that. So this is the overnight high that we saw around 8:30 this morning, just before 8:30. I have the pending order there. I don't know if that's going to be my target. For whatever reason, I'm kind of in the mood to use the 500 tick super trend, maybe the 1 minute super trend. You can see that's now at 55. My entry's at 68. I should have been in closer to 60, so I'm off by about 10 points. And I'm also playing a little bit, I don't know, on my heels today because my accounts are all over the place. Some of these are up $1,000, $900, while some of them are down $900. Maybe I should turn those back on. All right, I'm turning these three back on so they can manage themselves. And I guess this one's already fired today. It made 195. That's sick. And I'm now manually trading these other ones. But my biggest issue is just to not get concerned with my swing trades and just trade the trend of the day. The trend is your friend. And when I fought the trend, it cost me a shitload of money yesterday. But I'm seeing a little bit of a recovery. Remember, look at that. This is why I got out, because it's just a game of risk reward. If I held to this point, there's a good chance these accounts would have been blown. I'm looking for this high to be taken out on the Qs, 611.44. Had an issue at an arbitrary level of 611.31. What is this low? What is the 1016 low? Is this the 1016 low? All right, I'll put that there for now. I did lock in one runner. I could move my risk to 51. I'm just trying to ride this trend. I don't necessarily want to get out. We just double topped on the SPY. We're running into issues at 40, which I should have been a little bit quicker to react to. Interesting. Now 50's become a bigger level. So when we started this off today, this is me rewinding to 9:30 this morning. 6,740 was the biggest positive gamma node. And then let's fast forward 10 minutes. It still was. Let's fast forward 10 minutes. It still was. Let's fast forward 10 minutes. It still was. Let's fast forward to now. So actually, this is a new position. So this upswing right here is people playing the 6,750. This is a new position as of the last 10 minutes. It's a 0 DTE, and obviously because of this gamma influence, it is the 6,750, and it is a call credit spread. Not the biggest we've ever seen, but someone is betting on the day ending below 6,750, a call credit spread. That is an underbet when doing it on the call side. So someone is betting below 6,750. It is adding positive gamma to the system. So it does increase the chances of this getting rejected. But in the event that we break out, it actually kind of is adding some gasoline to the fire. So it's one of these weird things where the likelihood of a breakout is now less, but in the event we do break out, it's going to be a larger push to the upside. So it's kind of like a give and take scenario. A give and take scenario, but we honestly might be just setting up with the most classic cup and handle right now. Obviously, we opened up. We found support at yesterday's close. We pushed right to the transition zone that I called out to all of you. We push. We failed. We dipped. We rip all the way back up to where? Not only the intraday high, but also the top of the transition zone. And now we are officially back in the green territory. So watch this low, watch 35, generically watch this zone, but we might just be setting up with whether you want to call it inverse shoulder, head, shoulder, cup and handle. I just call it the fact that we saw a giant gamma pump to the upside at the 10 a.m. reversal. So there's a lot of different names with a lot of different things, and they're not, I mean, they're all kind of like technically right, I suppose, in a certain sense. Hang on. I need to not forget the fact that I am in a different position as well. Fuck. Maybe I should have set that break even. Oh, I'm torn because I was doing some bot trading and then some manual trading. Do I just want to pray that this doesn't fuck me up and take out this low? How bad can bad get? Tesla's looking good. Hood's recovering. Nvidia, Microsoft, Apple. Ooh, we just got smacked there. The market is not liking 40. That was
Order filled.
Well, never mind. My stop got hit. There's no question in even can I manage that stop. It just got filled, as you guys heard on that puke right there. Jesus. What happened? We were trying to push green, smashed. We were trying to push green, smashed. Trying to hold green right here. The 5-minute tried to get going. The 10-minute tried to get going. Well, that's a bummer. I was risking this recent dip, the most recent low, because even though we had higher highs and higher lows right here, this might be the fake out. Of course, that could happen, but the other situation is the actual puke, which what just happened to flow? Ooh, someone just dumped right there on the Mag 7. Same thing on the SPY. But the question now is, can I be patient enough for a higher low? I find this block to be very interesting. This sell-off, this 1 minute bar sell-off, because what just happened here at 1026 is going to be associated with this, like that dump right there in the Mag 7. This dump right here in the SPY. So the SPY was going down and then it got a secondary hit. Oh, brother. The question is, can I take... we're still dipping. Well, I guess it's good my stop got hit because this might be getting painful. Let's see. Can this recover at all, or was this just a giant fake out? Visions of grandeur. Was
Order
it
submitted.
Hello? The fuck? Oh, it's these accounts right here. I can zoom in. This is the bot account. So even this, like, I'm still looking for reasons to buy the dip. And the bots are like, nah, we should go short. And it's about to lock in as well.
Target filled.
Wow. Well, would you look at that? Would you look at that? Bitcoin did a mini jump correlation. I mean, by your own definition, it was a mini jump. So it's hard for me to believe that that would be any significant correlation, whatever, like at all. All right, so the SPY is attempting to hold that low at 1010 while the Qs actually puked. And out of how far did we dip? So that original trade that I was trying to get out at 200 actually still never hit. We got as low as 205. So I can't even say, man, if I held that, it would have been fine. Because that rip was probably too big. Probably would have knocked me out. I was probably playing with too much size. But let's see. 5-minute was trying to go bullish, knockback bearish. 10-minute, same situation. 30-minute trying to hold bullish. 5-minute try to go smack. 10-minute try to go smack. 30-minute is still bearish, but 4 hours still bullish. So it's kind of indecisive today, as you can see from the dump, the pump, and the dump. Maybe we're putting in a higher low here, but if we do that, it would be a double bottom on the Qs. Just be careful. I wouldn't mind playing the reversal if we see a higher low, something to like play off of. But the Qs just keep getting hit, man. Oh, here's a look at the flow. Mag 7 keeps getting unloaded. SPY was looking good, had a solid recovery up until about 1022. And ever since then, people are buying puts and they're selling calls in size. Dude, that was brutal. Right here, right before 10:23, the green line are 0 DTE calls. You can see that some player out there or group of players decided to sell those calls like no other. No other. Jesus. Oh, is this the dip to be bought, or is this just the momentary we're waiting and it's about to just do something crazy? If you do buy the dip, your risk is minimal, obviously. But it's dangerous because buying the dip right now is technically fighting the trend. So pick your poison. Do you want low risk or do you want to trade with trend? Here's the recent high. Here's the recent high. We're just trying to find support once again at this 25 level. Silver below $50 an ounce, just ordered 7 more ounces, BTFD. To me, a one-day dip isn't the thing where I'm like BTFD. Just because percentage-wise, it's only given back a sliver of its recent gains. Like, I don't know. I think a lot of traders out there, just because of one day's worth of movement, which this 5% drop, yeah, it's painful if you're watching the intraday, but think about the rip we've just been on. Like that, it's a small portion of the overall rip. I think more patience is required.
Order submitted.
What the fuck? It's targeting 200 again. Icarus is loving this 200 level. It's trading it on 3 accounts here. It's really loving this 200 level. Is this going to be the same thing as before that, like, it bounces before that? Dude, Icarus. I see what Icarus is doing. Well, hell, I know what Icarus is doing because I coded it up. And I honestly, I see it. We're trending down. That's a key level. It's putting in the price target a tick above the key level. That's a painful one. Don't bite the apple. I have no idea what you're talking about. Well, we're going to watch some of these lows and these highs and see what the hell way it breaks first. Oh, hang on. This could be kind of interesting. Hang on. I don't want that account. I want this account. Because before, when we were talking about the initial balance, this was the initial balance, the first rejection. Earlier today, I asked anyone if they are initial balance traders, as in you look at the hour high and low, which would have been what? I don't know, something like this. Like that was the IB high, somewhere close to this mark. And then the IB low was here. And before we were talking about the rejection, look at that. If you had a buy, okay, so the IB low was created here at 1029.18. Can you guys see this? This is an important thing. If you had a buy order right at that level, you're long at 205, you're already up 25 points, and you set your stop to break even. That's fascinating how much that worked right there. Holy shit, I completely missed it. But right there, if you faded on the first attempt, if you faded the IB break, we made the IB, the break was 3 minutes later, 4 minutes later, you fade it, you go the opposite direction. We're breaking down, thus you go long. You were long at 205, you took 2 points of risk, or 2 points of heat, we'll call it. And at this point, already set your stop to break even. Jesus. What a trade that would have been. Did anyone do that? we were talking about it, and I saw that it was 10:35, and I was like, oh, we haven't tested yet. And then I realized that, in fact, we did test. Just something of note. I think the strategy itself needs to be a little bit better refined. Freedom options, you caught it. You caught this, the IB fade. Yeah, breakdown. Because it's breaking down, you go long. Risk probably would have been, I don't know, 190 or something, maybe 2 ATR, 3 ATR of risk. But I got smashed yesterday, dude. You and me both. Man, I could have already been up 50 points. That was quite the trade. I find it a little bit questionable because it is technically counter trend. It is technically counter trend. Not necessarily the biggest fan of that. Are options improving at all? SPY put in a higher low. I'm liking that. I'm looking for an opportunity to get in. I wanted this to dip a little bit more. I'm not seeing my favorite bar structure to get in on. I'm looking for a classic 3-bar valley, like where that middle bar has a lower high and low than the other two on the side to get in. But does that mean that I'm just going to miss this entire fucking rip? Oh, decisions. Look at that fucking pump.
Order submitted.
Oh, where do I want the risk to be on this one? I need to move it up a bit higher. 25 for right now. 80, something like that. 80, I'm retargeting the point of control. If you're wondering where I came up with 80, it's because of bookmap right here. 80. That's the point of control. It's a slight overshoot of VWAP. VWAP's probably 71, 72 right now. So, of course, if we go up to VWAP and it starts to get rejected, I'll manage that. But right now, I have the pending order right at the POC. Right at the POC. And if we actually keep bouncing from right here, whatever this current low is, I might be able to use that. I'm literally just trying to, I'm in the mode right now of how quickly can I de-risk. That is 100% my entire goal. I'm shorting. Hey, you have a 50-50 shot. I mean, when it comes to intraday trading like this, a lot of it, I know it's like painful to hear and a lot of people don't want to accept it. It is a game of 50-50. Maybe you can increase your odds to 60-40 by just trading with the trend for whatever time frame you care about. Maybe there you could give yourself a little bit of an edge, but most of this comes back to risk management and sizing, appropriate sizing. That's how you make money. Are your positions going to show up on the other chart? What the fuck are you talking about, Mark? Mark, I have no idea. No clue what you're talking about. All right. Well, we made a higher low on the SPY and we made a lower low on the Qs. So that's a deviation between the two. So one is right and one is wrong. So the Qs have an expanding pattern. We have a higher high. You have this high at 951 compared to this high at 1018. Higher high, but then also a lower low. Look at this low at 10 and the low at 1030. So did we technically break to the downside on the Qs? I think so. But on the flip side, we still have higher highs and higher lows on the SPY. So there's a deviation between the S&P 500 and the NASDAQ. And if you're playing one or the other, you just have, like, when there's that deviation, probably the proper advice is to do nothing and just wait to see which one's right. As in, you either wait for the SPY to crack the lows or the Qs to crack the highs. So probably the best advice is literally to sit and do nothing. I am playing it to the upside just because I see the 5, the 10, the 30, and the 4 hour across the S&P 500 is all bullish, while we're trying to save it here on the Qs. I kind of care about this. Maybe this is my subconscious bias from my swing positions, but I'm liking that we're holding or attempting to hold the 60 level. So I'm looking at this recovery, and then the 5 and the 10. If we break out at 86, we're kind of good to go. So I'm kind of watching that. Mag 7 flow has stopped puking. S&P 500 flow has improved. I was watching that on my other screen. So like I was kind of playing with this trend, but yeah, I mean, you could either call it a 50-50 shot, or maybe at best, if you wanted to be the most kind with the odds, it's 60-40. OnlyFans CEO, people don't want AI generated content. AI can't replace human created content. Oh, I don't know. Maybe. That's interesting. He's commenting on it. You'd think that for him, he doesn't care as long as the money's rolling in. It should be noted, higher high and higher low on Tesla, lower high and lower low on NVIDIA, lower high and lower low on Microsoft. Apple kind of consolidating, hasn't made fresh highs, hasn't made fresh lows. Palantir, higher lows and higher highs. AMD, opposite. So semiconductors are taking a hit today. Why is the NASDAQ dragging behind? It's because semis, NVIDIA, AMD, Avago are all looking pretty weak on a relative basis. Oh, I would love to de-risk my current position. I'm currently long on NQ on a day trade, and I'm thinking I might be able to move my risk up. Might be able to. All right, well, at this point, I'll mark out the high, the recent high and the recent low on SPY. And obviously, we have the recent high and the recent low here. The SPY has almost bounced that full range, while the Qs have bounced maybe 2/3 of it. And we might be putting in a lower high here. Fuck. Well, that's not so good. That's not so good. I need this wick to be a little bit of a fake out, and I need this party to continue to the upside. Is gold about to rotate into BTC? I find that unlikely. Of course, anything could happen, but I don't know what that trade thesis would be. I don't know why so many people think about what you're like from a buying and selling perspective. That is saying that in aggregate, people are like, okay, I am done with gold. I am now turning from bullish to neutral, bullish to bearish. But then simultaneously, that's going to prompt people to be like, okay, I'm now going from bearish to bullish or neutral to bullish on Bitcoin. The thing being pitched as digital gold. If anything, I would actually say Bitcoin bouncing has a higher correlation with the risk on situation of the SPY and the Qs of just the overall market indices going up. We both have inverse and regular head and shoulders. Let's see who wins. Well, that's kind of what I'm talking about, of like so many people just get infatuated with this fucking stupid ass idea of like technicals being the end all be all. And I think technicals are good, but know the limitation of your tool. I think they have a time and place. And actually, I think technicals are great for kind of like your last stand of like, hang on, if this level breaks, I know I have to get out. I think in terms of measuring your risk, I like it. But there are people in this world who exclusively trade on technicals. And I mean, you could do it, but yet I've never met a person who profitably does it. And it's because of that situation of like, hang on this one, on this time frame, on this 1 minute chart, I see this, but on the 3 minute chart, I see this. It's like, well, how do you know which one's more important? And what people do who teach that type of stuff, they use Monday morning quarterbacking. So like in the example, they know where it's going to go, and then they Monday morning quarterback and find out a structure that would have led you to that conclusion. But in real time, it's different. And you're actually highlighting that point right now of, well, hang on, in real time, if you have literally polar opposite structures on either the same or different time frames, how do you know who wins? Our orders have 0% effect on the market. That's not true. Your orders have a low effect, obviously, like if it's relative to the amount of size. But to say 0, that's hyperbolic, because like your trades do hit the time and sales, unless you're trading on like a paper account or some shit like that. But it's a low effect. I'm not disagreeing with that, but to say 0, that's inaccurate. What did you look at to make you think a day swing was a good idea? You need to learn how to read charts, not just what you feel. Are you even talking to me at this point? Oh, it looks like you're arguing with someone else in chat about gold. Yeah, what I see going on in gold right now, I'm not necessarily the biggest fan of, folks. I want to be honest about that, because like this is the first time we've seen a little bit of red and everyone's like, gotta buy the dip now or gotta panic. And it seems like it's a lot of like emotion driven decision making right now on gold, which I am not a fan of. The difference between gold and BTC, gold will still be gold in 10,000 years. I don't know about that. I am unaware of that. And I bought the hype. Yeah, buying hype generally never turns out well. Never really turns out well, if you ask me. All right, well, we officially have another higher low on SPY. We just took that out, and we have lower highs and higher lows on the Qs. So the Qs, technically consolidation. There's the higher high. Here's the higher low. The SPY is bullish, higher highs and higher lows, and it gets questionable if we break this 1045 low. But what I don't like about it is the disconnect between the SPY and the Qs. I do not like that. And also, I don't like the fact that I'm looking for things to be bullish, even though the Mag 7 is getting fucking pummeled right now. This is concerning. So if you want to be long because of price action, hey, have at it. But be very careful with your risk, because that is looking quite dangerous. That's actually looking very dangerous. In fact, how do I want to handle? Let me move myself back over. Hang on, let me check out one quick thing. How do I want to handle? Do I? Obviously, I should be using this low. I think that goes without question. Son of a gun. How do I want to handle this? Higher highs and higher lows on the SPY. SPY, Delta, try to recover. So, like, I get price looks somewhat decent, but I'm like, the flow looks horrible right now. Flow looks absolutely horrible right now. You need the semiconductors space to, oops. Why did that just disappear? There we go. Sorry about that. You need the Mag 7s to pop here. We're back at this level at 40, which was the initial level. To be fair, the bigger level has now become 50, just so everyone knows, the biggest gex right here. There is support at 6,680. That is the put credit spread, downside support, and you have a topside resistance at 6,750. If that cracks, you have a shot at a new all-time high, just because we're not that far away. But I'm just calling out the fact that there is legitimate resistance right there, so please be mindful. And I'm trying to play the test to that resistance, and I am straight up not having the best of times. Are we double topping here on the Qs? How can I de-risk this situation? Or do I not de-risk it? Do I just fucking let it rip and see how this plays out? That is the other option. That is the other option. Well, while we're waiting for it, shout out to Funded Futures Network, aka FFN. If you are looking to trade with someone else's money the way I am right now, FFN is your most financially reasonable option. 50% off, buy one, get one, and no activation fee. Use that code Goonie. So right now, personally, I would say that the standard accounts are better. That's just a personal opinion. Use whatever account size you want. But the fact that that's $150, it's not really, because you're going to get two accounts for that, because it's buy one, get one. So for $75 and no activation fee, you can have an account, but technically it's going to be $150 and you're going to get two, but it is buy one, get one, 50% off. So for $75, you're going to get two. 50% applied to that. So each one's like $37 and there's no activation fee. So check that out. It's pinned to the top of chat in the description of the video. Apex's deal ended a couple days ago. So right now, across the world of sim funding companies that I currently trust, this is the one that has the best deal. On that particular note, I should also let you know that some sus stuff has been happening with TopStep and Tradeify. If you use TopStep, if you use Tradeify, you should look into what's going on. But on the TopStep side, because the outages yesterday, they had Project X or whatever, people who made money yesterday, they took it away from them. So if you are on TopStep, if you are using Project X, that is very, very suspect. And then if you are working with Tradeify, please understand that the new face of the company, the person they just signed, is one of the biggest scammers in the entire retail trading world. And this is not the first. It is unfortunately the one in many of the line of people working with Tradeify who are proven scammers. So for right now, I am taking a step away from TopStep. Not that I've ever really been associated with them. And same thing with Tradeify, taking a step away. I'm seeing some stuff and I don't know which way it's going. But TopStep, they were taking away the profits of people who rightfully earned profits yesterday. And Tradeify, at a certain point, how many scammers do they have to sign before you're like, this is a little bit suspect? So for the time being, taking a step away. And of course, maybe both of these companies fix those problems and whatever. But other than that, I am moving on with my life. So right now, we're going to see how things go. Who's bad at Tradeify? Well, the most recent one they signed was that TJR kid or whatever, who literally ran his own scam prop firm. And also he's just known in the world of retail space to dump meme coins on his own followers. He's just like this marketer dude from Miami, and he's really good at marketing, obviously. I just got to fill right there at that point of control. But they hired the other scammer, Jay Dunn, with that guy from Family Funded Network or whatever. It's, I don't know, just scammers across the board, unfortunately. I should probably, at minimum, move this up and not do the same thing I did before. Should probably move this up. So these apexes, that was the best trades of the day, and they are obviously not looking so good. But then these are still live. Should I just move it to break even? I mean, they're up about $1,000. At what point do I just want to take it on the day, you know? The Team Bull Kid, yeah. He was one of them that he and his partner, I think it was more so the partner, to be fair. They were like photoshopping their results and they were trying to teach people how to trade, except they were making money off people blowing out. So it just became like this whole thing that got ugly pretty fucking quickly. These are climbing here. What do I want to do? All right, we took out the high from yesterday. We're coming up to this test at 50. I'm going to set an alert there because there is a chance of a rejection at that level. That might be the level I take my profits at. Here, I'll throw this up at 25 just for now, but understand I might manually close that out. All right, well, I obviously don't want to risk money. Okay, so I'm moving the stop to break even. I just have an arbitrary price target up there to be up there. But there are two things I'm paying attention to. Number one is... Well, hang on. What's that? That's it. So we have the pre-market high. No, there was a high at 315 that it might react to, but technically I could ride it all the way up to 68. So 68. This would be if I want to play the overnight session high all the way up here. Right there. 68. SPX. I might have to react to this because of this giant level right here. Key technical level, key psychological level. I did set an alert at 50. So if we look like we're going to get rejected, which there's like a very legitimate chance that that happens, I might just take my profits off the table. Well, we definitely have higher highs and higher lows now on both. Higher low at 1045 and higher highs at 1054. So at least on the 3-minute chart, price action is bullish. The SPY just hit a delta high, trending up nicely ever since 1032. But the one fly in the ointment, as Rick Santelli would say, is the Mag 7 flow is not looking good. Granted, it's maybe curling up right now, but that's why I'm so on edge of this right here, this rejection. Dude, do I have to manage these individually? Some of these account, dude, why did I run so many different bots? It's kind of fucking things up today. I might need to manage these two counts individually because they're just barely break even while these other ones are up 1.1, 1.1, 1.177. I don't know what the fuck happened with this bot, but this blew out super early on today. I need to look into what happened there. We are coming up to what level? Oh, the initial balance high. So we went from breaking the initial balance low. Dude, that was the trade of the day. It's funny that we were talking about it a little bit. To be fair, it's not like I'm the biggest initial balance trader in the world, but if you took that first rejection trade, look at that. You took 2 points of heat and you are now up 100 points. What a fucking trade that would have been at 1033, fading the initial balance. At this point, well, as soon as it popped, you could have set your stop to break even. It popped, it pulled back on this push. You could have then set it to 30, your stop. And then on the additional push, you can now set your stop to 55. So no matter what, you're guaranteeing yourself 50 points. And who knows? At this test, it might get rejected, whatever that higher low is. If there is a higher low, you set it there. Over breaks out and runs, you could just target the overnight high all the way up at 368. That is crazy. Did any of you catch that? I know that one options account, you said you went long. Are you the only one who got it? I took the honey buns. Well, Israel V2 sounds like you might have caught it. What? Something just screamed in my ear. Chuck 4 options. You caught it? That's awesome. Well, I'm just waiting for 50. Here's a look at flow. Here's a look at flow. Before I let you guys go, do not forget the best deal right now for $75. $75, you can get 2 accounts. Get 50% off. That is a great deal. 50% off, buy one, get one, no activation fee. Use that code Goonie, pinned to the top of chat in the description of the video. What's the book map look like? A lot of people trying to sell at 325. We do have some support here at 80, if you will, at 71. So I'm watching the VWAP. I'm watching the point of control. These might be where the dip buyers are, but it looks like the real resistance is up here at 325. So obviously pay close attention to that. Obviously, on top of that, pay attention to 45. We just spiked all the way up to 49. So, I mean, we're literally within a point there. This is going to be a struggle. I don't know who's going to win the fight, but I can tell you that's going to be a struggle. And now there's even some positive gamma starting to form at 60. So basically 40, 50, 60, you got to pay attention to all those $10 rungs. So shout out to FFN. Use that code Goonie if you want 50% off, buy one, get one, and no activation fee. If you want to use things like spot gamma, what's on the screen right now, or if you want to use things like bookmap, that's all in the description of the video. The link should not be that difficult for you guys to find. Other than that, pay attention to the trend, the higher highs, the higher lows. Be careful of that rejection on SPX, please, here at 50. It's that big gamma node, so watch for that test. And also be mindful of the fact that even though we're recovering higher highs and higher lows, the Qs, I mean, the Mag 7 looks like shit. So something... I don't like this. Just please promise me you're going to be careful, because that is not looking the best. So just wanted to share that with everyone. And a final reminder that after this, in a couple hours, I have to fly to Switzerland. I'm going to a crypto conference. If you're in the crypto conference, make sure you stop by, say hi. Would love to shake your hand. Would love to meet you. Other than that, if you're here watching the show, watching the update videos, understand that just for the remainder of the week, the schedule is going to be a little bit weird, and we have to kind of see the type of internet we have. I know we're putting out some content, 100% sure, from Switzerland, but in terms of the quote-unquote normal stuff, it's going to be dependent on the internet that we have and all that other stuff. So I just want to call that out, that I'm not just randomly ditching you or anything like that. It's just I'm about to hop on a metal plane and go across the world, so... we're going to see what Switzerland is all about. Matt is getting that tax-free trading account. Dude, I wish. All right. Anyway, folks, that's what I have for you right now. I appreciate all the good vibes. I'll catch you a little bit later on. Have a good one. Peace.